Hello, everyone. Welcome to this month's Fundera Fireside Chat. As a reminder, I am Meredith Wood, Editor-in-Chief here at Fundera, and this is a monthly video series we are doing to sort of break down the more complex questions that we see business owners approach whenever they're applying for a small business loan, and talk them out with people that are really masters at answering them question, people here at Fundera. Today, I'm excited to be joined by Senior Account Executive Ryan Conti. Ryan, could you say hi and just tell us a little bit about what you do here at Fundera?
Yeah, hi Meredith. It's a pleasure to be here. I'm excited to talk about this topic. I am one of the Senior Account Executives here at Fundera and have been here for a few years now. So I've had the opportunity to speak with many business owners and see a lot of different situations.
Awesome. So today's topic is choosing the right loan product for your business. And we're kind of in an interesting place right now because the world of small business lending is completely transformed. And all of a sudden, it's not just your typical term loan out there for business owners. And so when you approach the process, you might be a little bit overwhelmed about your options and unsure of how to correctly choose which one is right for you. And Ryan, this is a topic that you and I talk about quite a bit. And I'd love to hear you just expound a little bit more on why you think this is a really relevant topic for any business owner, especially those who are evaluating getting working capital for their business.
Yeah, absolutely, Meredith. So traditionally, the products that everyone knows is that multi-year term loan that the banks offer. There's a few other ancillary products that you might have heard about, equipment financing, but there are new products popping up left and right that these new alternative lenders, with their ability to analyze your bank statements and look at different data points, they've been able to create some really creative products to fit all sorts of needs and service a lot of those people who aren't being serviced by banks. But understanding what options are available to you and trying to weigh exactly which one's right is really challenging. So I think that it's important for business owners to understand exactly what options are available within the marketplace today and what options they might be able to prepare themselves in the future to see what's going to be the best fit for helping their business solve any immediate problems.
Awesome. And you sort of touched on this. You're talking about the other products now outside of a term loan, and you mentioned equipment financing. But could you provide a few other examples of loan product names they might hear during their loan search?
Yeah, so there's the traditional term loan, but there's also something which we call a short-term loan. So that's any loan that's under 2 years. It's not as traditional because they're not going to be looking at debt service coverage ratios like a bank or these multi-year lenders would, but rather just looking at the revenues that are coming into the business to see if you'd be able to support the repayment if it was over, say, 12 months. Those are a little bit different structure. There's also invoice financing, invoice factoring, two different kinds of essentially asset-backed loans where they're leveraging your outstanding accounts receivables as the asset in order to get you approved and to help secure the loan to get you a lower rate. There's also obviously the equipment loans. And then there's some non-traditional lines of credit where they look at the transaction history within the bank statements and any other financial data you can give them, be it PayPal, eBay, QuickBooks, and they can extend a revolving line of credit to you as well in ways that they might not have previously been able to.
Awesome. So as a business owner, if I'm starting this process, I know that I'm going to have some tough decisions to make. What are the first things that I should be thinking about, how I'm going to use the loan, et cetera, to make sure I approach the process with the right things in mind?
Yeah, the first thing that I ask every business owner that comes through is, what are you looking to accomplish with this loan? And that goes a little bit deeper than just what is the use of proceeds, right? Like if you are looking to refinance existing debt such that you can free up cash flow to either be more profitable or have a little more flexibility in how you run the business, that's a great reason. If what you're looking to accomplish is to renovate the building or to, purchase some new equipment, understanding at a very fundamental level what you're looking to accomplish, what you're trying to solve, and being very honest with yourself about that is critical for determining what the right product is. Because ultimately if there's this whole world of loan products out there, there's a set of products that you qualify for, and there's a set of products that you're interested in that can help you solve the problem. And hopefully there's some overlap. Our goal here at Fundera is to help you evaluate where that overlap is and then determine what's going to be the best course of action for you at this time.
Mm-hmm. And can you talk a little bit about how you walk through that evaluation process? So if I'm a business owner and I have, why I need this loan and I have qualified for a certain set of products, like how do you come about that decision? Which one is right?
Yeah, so there's a couple different things that we're going to talk through, but ultimately it's going to be what is the cost of this loan? And there's monetary cost, but then there's also the opportunity cost or the cost of your time. So there are these short-term products where they're actually very quick and easy to get approved and get funded. And for a small loan amount, paying a little higher interest to save yourself a few hours may be justifiable. It really just depends on how much you value your time and what other things you could be doing with it. There's also a look at, depending on the use case, that a lot of times will determine what your expected term of repayment is. So if you think, for instance, you have inventory, it's before the holiday season. Maybe you just need to buy bunch of stuff, but you're going to be able to pay it back in 3 months. There are 3-month loans or 6-month loans where you can get a fairly low cost of capital, even lower than maybe a 3-year term loan that has a much lower APR, simply because there's origination fee on the term loan, and if you were to hold it for 3 years, it actually ends up being a higher cost of capital. So understanding the use, understanding how long you might need to pay it back can help you evaluate what's going to be the true cost of this loan to determine which product is the best fit, while also weighing the fact that some products just take a little more work on the business owner, a little more documentation.
Mm-hmm. Ryan, I have a really specific question based on sort of the scenario you presented there. If I'm somebody that's in a position, I need short-term financing, I know that I can pay it off in a certain amount of time, and I might be evaluating between a shorter-term product and, like you said, a longer 3-year term product that has lower APR but cost of capital is higher. How does prepayment work into that? So would it make more sense to maybe take the 3-year term loan and pay it off early, and because of the prepayment situation? Can you talk about how that would work?
Yeah, what I would recommend for every small business owner who's getting a loan offer from a lender is ask them for an amortization schedule, or ask your Fundera rep or whomever your point of contact is. Make sure you get an amortization schedule, because then you can actually break down what your payments will be each month or each day. And if you were to pay it off after, say, 3 months, you can compare the two products and see exactly what the cost would be at 3 months. And you'll see that there's some break point, right? There's going to be some point where one loan may be cheaper than the other, or you may realize that at any point, the longer term loan option is cheaper and it's still a better fit. So making sure with the longer term loan that there is no prepayment penalty is critical to give you that flexibility. And I do want to clarify one thing too is, when you think about the cost of capital, it goes both ways, right? A lot of business owners might not have all their documents in order, but getting a 2015 profit and loss or balance sheet may end up saving you, $5,000, $10,000, $20,000 in total loan cost. And when the numbers start to get up to very large amounts, it's hard when you break it down not to invest that time to put that together when you think about what your time's worth or what it'll mean for the business. So it goes both ways, and it's really important to understand what the difference in cost of capital for your options are.
Awesome. And then I think the last question is we've already sort of provided one specific scenario, but do you have a particular instance you remember with a customer where they were in a situation where really the best product for them was actually a little bit surprising?
Yeah, there's two examples that come to mind. One is a little more obvious. We had a equipment broker who would buy used equipment, refurbish it at their shop, and then ship it overseas and sell it. And they were really struggling to get the capital they needed. they could get traditional term loans, but the problem is they might go 3 months without needing the capital. And then all of a sudden they have an opportunity, a business goes under, and they can buy all the equipment and they need a ton of capital. And what we were able to structure for them was an asset-based line of credit, using all of the equipment that they had on their yard to support a very large line of credit, so that they would only pay for the loan when they used it, and they only used it when they needed it. It was a great product, and they wouldn't traditionally be able to qualify for that type of line of credit if it wasn't for the assets. Another example is we had a e-commerce retailer. They had an Amazon site, and they needed about what equaled 20% of their annual revenue to take advantage of one of their suppliers was basically having a fire sale. They told them that they would sell them all of their product at 50% off if they could buy it before the end of the week, and they needed the money super fast. And in that example, even though they paid a little bit of a premium to have a short-term loan, they knew they'd be able to get a return based on their margins, and they didn't have time to wait for the multi-year term loan. So we talked about it, and we got them the short-term loan, and then we looked at setting them up with a line of credit, so that in the future, if this problem arose, they would have access to the capital, and they wouldn't have to pay that premium.
Awesome. This was really great information, Ryan. I think that it provides a lot of perspective, but one of the things that you really said that stuck with me is like understanding the different things that can affect your loan application, like willing to invest the time in creating certain documents. So for those that find themselves in this position, I highly recommend giving us a call, 1-800-Fundera. You're able to speak to Ryan or somebody that serves in a similar role like Ryan, who can help you understand the cost benefit of those decisions and those investments of your own time, and help you work through these scenarios, produce those amortization schedules if you're evaluating different products based on when you can pay them back, because it all is very technical, and the end goal is to find the best and most affordable product for the situation that your business is in. That being said, we're all finished with the Fireside Chat for today. Thank you so much, Ryan, for your time. I really appreciate it.
Thank you, Mary. It was my pleasure.
And again, visit Fundera.com. Call us 1-800-Fundera. We're always happy to help. And if you don't need anything, we'll see you guys next month for our next Fundera Fireside Chat.